Good evening, traders. Have you ever wondered why the market suddenly reverses right at a certain level like magic? That is not magic, that is market logic. And it often revolves around two critical levels, the day's high and the day's low. In this video, I am going to reveal why these levels are not just numbers but battle zones where big players make bold moves and where smart traders like you can get a powerful edge. Whether you are a beginner or a seasoned intraday warrior, mastering this concept can be the difference between chasing trades and controlling trades. So stay with me till the end because once you understand this, the market will never look the same again. Let us decode the day's high and low, the heartbeat of intraday trading. So they act as key support and resistance level. Day high is equal to resistance, day low is equal to support, breakout above high is equal to bullish signal, breakdown below low is bearish signal. It is a very, very good task to identify the day's high and day's low. That is very, very important. So sometimes market will define its day's high in the initial hour itself. Day's high and day's low will be defined. Sometimes market will take time to define day high and day low. So you should know the where is the day high and day low for the particular day. I'm not talking about previous day high or previous day low. The current day trading high and trading low should be identified by you. That is the task for you. Why it is important is it is market sentiment indicator. Price below day's high is equal to sellers are dominant. Price above day's low, buyers are defending. Failures to break either this level or that level, exhaustion or indecision, you can identify. That is very important. So this is the chart image showing days high as resistance, day low as support. Once in an initial hour or initial a day high and day low has been defined, your trade will become very simple. Again, I'm taking you to the chart of Nifty index. What happened today? Day high was defined in the initial 10 minutes candle. This is 5-minute candle. Initial first 5-minute candle, day high 25,522, and the day low, it made a lower low. You can see these plus symbols. When it makes a low, it will be plotted. A day low, after making initial two break and breakout of the initial 5 minutes candle, initial 2 plus candles plus, you can see it is making a lower low. And this low was held. That means the market found its support in the initial. Then market started reversing from this level. That means it is our market started. Big players started defending this level because they had already taken levels. Control over the market yesterday itself. Here, when the day low has been defined, the market rallied. You can see rallied up to 25,572. once, and around 2 p.m. it again rallied to 25,580 or something. You can see this is my indicator I've made for myself for my convenience so that my trade will become simple. After 2 p.m., you can see the same amount of red bar, such a wide range bar you can see from 570 around to within single candle it is coming to 520, means 50 points range candle made the market to just to crumble, and finally it started coming down and it broke below the daily low. It broke below the daily low and closed below the daily low, but it has held the previous day low. Previous day low was 25,378. In the next chart, I am showing you Asian Paints, how you can trade. Actually, Asian Paints made a big, huge candle, 5-minute candle, defining the low and high of the candle within 10 minutes of the opening bell. That is from 2430 to 2470, you can, what is the range actually? 40 points range. That is 2% within a single candle. And day high was defined, and from there the market started rejecting from this level. So this is an indication for you not to go long or buy this. Some people, they make mistake, they pick up the stocks from the screener or from viewing the TV or recommendation from the TV, they go for this Asian Paints. Actually, Asian Paints was recommended in CNBC TV 18 today for buy call. It was a buy call, but see what happened. What happened here? The day high was defined, the market uh, even in the second hour also was not able to go to the day high. So no day high was registered after that. After the initial day high plotted, these plus marks are there. And then it started coming down to the day low. This type of price action I've seen many times. A single candle standing out, and the other thing slowly the market started selling off. At that period, you can opt for a PE. PE will become cheap, and you can go for PE and you can trade in this. This is a very good indication if you know the day high and day low. Finally, because since the market broke down, finally it broke below the day's low and closed inside the day's low. Even though it broke below the day's low, it has closed inside the day's low. In this chart, it is Havel's India. Havel's India is a very good chart. You should know. Here in this chart, the Havel's first 5 minutes candle defined the high, and in second 5-minute candle defined the low. So within 2 5 minutes candle, low and high has been defined, and this stock started trading above this low, defending this low because there was a bullish move from the previous day. And this low was held, that is 1544, and then the range breakout, there was no look back. It has plotted, you can see continuously plus signs. New highs were plotted in this stock. So you have seen the rally from 1580 to 1590. it has rallied from 1544 to 1590, that is 40 points, 50 points, 50, almost 3.5 to 4 percentage rally in this stock. This is how you need to know. If you know the day high, day high and day low are very important. The market has to define the day high and day low. Then only if you take the trade, you will trade with conviction. That's why you should know about the day high and day low. Not the previous day high or not the previous day low. For the current day, you should know where the day high is formed and where the day low is formed. So institutions defend or attack these levels. Sudden moves, you can see the institutional activity, you can see fake breakouts, traps occur near these points. That's why you should be watchful about it, and you should be able to identify the day high and day low. Actually, I too was finding it difficult for identifying the day high and day low. And I asked ChatGPT to code for me to give me to identify the day high and day low indicator. So you too can do that. You too can give a prompt to ChatGPT and you can develop your own indicator for yourself. See, these day high and day lows are bear and bull tug of war zones. So here bears will come active and bulls will come active. If the market is coming down to the lower level, daily low, then bulls will defend the zones, and if it is at the resistance, bears will defend the zones. This is what happens in the daily trading. So you should know day high and day low. Trade entry and exit references use levels to set stop loss and targets. You can use as these levels to set your stop loss and targets, and you can build reversal or breakout strategy. These are the levels ideal for pullbacks and also fades. Right? In this example, the image, you can keep the stop loss over here by seeing the day high and day low, and you can guess for that. And this day high and day low is foundation for many strategies. Like tools like VWAP, TWAP, pivots align with highs and lows. When they align with day high and day low, that will be a proper setup for you to enter into the trade. Suppose TWAP, VWAP align with the pivots, align with the resistance, day high, that is a proper selling setup for you. So it is also based for market profile and intraday setups. So here you can see VWAP fading out in this image. Whatever we explained is the resistance and support zones can be identified with the TWAP and VWAP like that. So these lows and highs will define the intraday trend and also the range. If higher highs and higher lows are formed, that is uptrend. If it is stuck within the range, that's what happened in the which stock? I think it was stuck inside the range in the Asian Paints. It was stuck between the day high and day low. Finally, it broke below the day low and closed inside the range. So if it is stuck between the range bound also, you can make out. If it breaks with volume, You can identify trend expansion also. That is an example of TCS. TCS broke below the day's low and there was an expansion. It moved towards the low. It made a low of 3,397 in the today's market. So this is how this is the picture it is showing, range bound zone. If it breaks above, a day high and day low will be identified. If it breaks above, then it is a expansion. The trend is expanding towards the upside. In this example, I am taking the example of Havels again. Here, initial hour, initial within 5, 10, 15, 20, 25, 30, 35, 40, 45. That means within initial hour, day high and day low was made. There was no low was plotted down and the market broke above this initial high, the range breakout. And also here you can see the VWAP. VWAP is aligning with this price behavior and you can enter into the trade comfortably. That's how it is very, very essential to note down for the day high and day low. Day high and day low. Probably nobody might have talked about this. Everybody talks about previous day high, previous day low, weekly high, weekly low. But for your intraday trade, for the current present day trade, you need to identify the day high and day low. Once it is identified, it becomes cakewalk for you to take the trade. Whether to take the trade or not to take the trade, you can decide on yourself. That is very, very important in the market. It gives you edge for your trade. In this example of TCS, range was broken down after 2 hours. Not till 2 hours, it was within the range and day high. It was not able to go. It traded within this range and finally it broke below after 11 a.m., 11:30 a.m. You can see the range breakdown and market moved down. Market made a low of 3,397 and all. Then you can see so this will help you to take the trade. It is a clear thing, you can see neither price is expanding above this red color line. This is the resistance plotted over here. And the lows are plotted, new lows are plotted again and again. That is an indication that market is weak. So summary thought is the day's high and low are the battlefield boundaries of intraday price action, where the fight between bulls and bears is most visible and most decisive. See this is the picture where bulls and bears are fighting with each other within the day's boundary, within the day's high and day's low. So if bull is strong, it will defend the low and it will take the market, take the price high up. If the bear is strong, it will defend the resistance and it will not allow the price to move above that. So finally, subscribe to my channel. I am Nalakshi Swami signing off. Thank you very much, friends, patiently listening to my video. Do subscribe and support to my channel.